Hi there, it's Jessica Licona, and we're coming to you live from Compass Licona Team headquarters here in Austin. And I've had a really fun time gathering questions. I always love to look at themes of where people are taking their questions. And so one big one I'm hearing from a lot of particularly first-time home buyers, maybe even second-time home buyers that are being guided by their parents that remember the double-digit days and remember when you needed 20% down. Well, those times have changed. So I've done just some quick back of the napkin math, if you will, and I'm gonna look down at my paper to kind of guide you. So I wanted you to think about this. Anytime you are looking at, I'd like to buy a home, but I need 20% down because I wanna avoid the PMI, the private mortgage insurance. I wanna challenge you a little bit to think about this. First and foremost, interest rates have only continued to peak up a little bit. So that's not even putting this into the equation. If we did, that would mean that you're leaving more money on the table. Allow me to explain. So let's say that you're buying a $500,000 home and you say, look, I only have 10% right now. So I have 50,000. I need another, let's just even say a year to get another 50,000 saved. In the course of that year, the average, according to the National Association of Realtors, the average appreciation is 5% per year. So that home that you could buy today for $500,000 with mortgage insurance in 1 year could be potentially worth $525,000. Now, follow me on this math. If you have a 720 credit score or higher, I'm just gonna work off of that for a safe assumption, your PMI might cost you $900 a year. So less than $1,000 a year. But you're saying, hey, my parents told me I need to wait. I want to avoid PMI. So you've waited now. And instead of that home that you could have bought today for $500,000 and started building equity, you wait till next year when you finally have the money. And now that home you're going to have to spend is $525,000. What you've done is you've basically left on the table $24,100 in this scenario. So I want to remind you, PMI, while yes, it is something to consider, but if you've got strong financials, let's talk about getting that out of your head, getting in with, let's say, 10% down, and then you've built equity. But if you do feel really compelled to say, I really want to talk further about this, let's get a lender involved and remind you that you can always pay down your PMI, right? And have that cancel at some point. So really cool topic to think about and talk through with parents and relatives. I know so many of us get guided by them. I wanted to bring this topic to you. Lean in, ask us questions about it, and we can connect you with great lenders that can help you calculate and think through how to spend your money and build equity best. We look forward to hearing from you. Take care.